Now what we're going to talk about is something called a chart of accounts. A chart of accounts is an example listed here up on the projector, and that is something that you create when you begin a business. So it's something you need to give some thought to before you begin your business, because what you're going to do is think of all the accounts you're going to need in order to record all of your transactions for that business. And you're going to categorize them like we have done so far. First of all, we have assets. Assets are always listed first. They're the first part of the equation. And they usually are beginning with ones. Could be 100s, could be 1000s, could be something larger, depending on how many accounts you need for your business. The next category is the next part in the equation, or liabilities. Those usually start with 2. And the third one is your owner's equity account or your capital account. And those usually start with 3. Could be 301, could be 3001, could be 3010, anything depending on how you're setting up your chart of accounts. Revenue accounts typically start with 4. They can start with another number depending on the type of business. But for the purposes of this class, your revenue accounts will start with a 4. In expenses, the last one, or the decreases to owner's equity, will start with a 5. Now, think about the different accounts that we've talked about. How about for assets? A couple examples of assets we've worked with: cash, equipment, supplies, accounts receivable. So you're going to list all of your assets and give a number to each one of them. So all asset accounts will begin with 1. So for example, cash is usually listed first. It's the most liquid. So it may be given the account number 101 or 1001. And another one, supplies. Maybe you'll give supplies the number 110 or 1010. You'll determine that for your business. Now, do you do the numbers consecutively for each category? Makes sense that you might, but you usually leave some gaps in the numbering systems to plug in new accounts that you figure out later that you need. So, for example, maybe you don't start out with a vehicle for your business, but later you're going to buy a vehicle, which is a new account, and therefore you're going to need a new account number added to your chart of accounts. So every account has to have its own number. Okay? Is that clear? So you determine the chart of accounts and number each account listed in it. And they're categorized according to something similar to this: assets, liabilities, capital, revenue, expenses. Okay? Now, once you have all of your accounts created and have balances in them, at any given time you can do something called a trial balance. Now, a trial balance is simply a listing of all of your accounts and their balances. And you really only have to list those with balances. So, a listing of all accounts and their balances. And if you've done everything correctly, those lists of accounts and their balances, both a debit column and a credit column, should equal each other. In other words, all of your debit balance accounts should be equal to all of your credit balance accounts. Or all of your asset accounts should equal all of your liability and capital, etc. accounts. Now, what happens if when you do a trial balance, your debits don't equal your credits? You made a mistake somewhere. What's the first thing you would do is if the two columns don't balance? Okay, or re-add. It could be a computation error. Just re-add them again. Maybe you made a mistake adding. If it's not a mistake in adding, what are you going to go back to? Yeah. First of all, you're going to go back to the accounts. Like today we did T accounts. You'll go back to the T account and see if you made a computation error there. Maybe you wrote it incorrectly. Anything like that, you're going to look for those kinds of errors. If you still find that you're not in balance, you go back to the transaction and make sure you recorded the right amounts under each account and properly as a debit or credit. Now, this trial balance is then used to create all of those financial statements that we talked about. What's the first financial statement you create? Good. Income statement, followed by statement of owner's equity, and then the last one is your balance sheet. Good. Now, the heading for a trial balance is similar to the financial statements, and that is the name of the business, followed by the title of the statement. In this case, it would be trial balance. And the last one is simply the date. So similar to the financial statement headings, trial balance has the same type of heading. Now, could you do a trial balance at any point? Absolutely. It just shows that you are still in balance with that accounting equation. Your assets still equal your liabilities and owner's equity. Your debits still equal your credits. It's just a check for you to make sure you're still in balance. The last thing you want to do is have a mistake that goes on forever, and then you have to go back and correct everything because you haven't been doing trial balances.